Hello, everyone. Welcome back to another episode of our weekend market analysis series. This week, we are switching things up a little bit, and I am bringing back the USDJPY into our portfolio and watch list for the new week. Well, the GBP USD seems to be in a bit of a holding pattern, and the indecisiveness in the last couple of weeks reduced our chances of holding on to a position for an extended period of time. So, until things pick up there, we will be focusing on the USD JPY. Now, it's been around 9 months since we looked at this pair, and wow, what a ride it's been from speculations about changes in the Japan's monetary policy at the start of the year to the yen pushing a recovery mode during the mid-year, and more recently, the USD JPY oscillating around a critical structure following rumors of intervention from the Bank of Japan again. But before we dive into the technical details, let's take a quick look at the key events that shaped this market through the course of the year. Well, in January, USD JPY was hovering around the 140, $141, 140.41 Japanese yen area as Japan stuck to its ultra loose monetary policy, while the Fed's higher interest rate continued to boost the US dollar. And as you can see on the chart, this resulted in a uniform higher highs and higher lows, giving us a beautiful ascending trend line during the first 6 to 7 months of the year. And this continued into the mid year as the yen had weakened further, pushing the USD JPY into that year high around the 162.00 area. Now, the most critical update came in July when the Bank of Japan made a key policy shift by raising interest rate for the first time in years, moving the benchmark rate to 0.25%, giving the yen a temporary boost, and this led to that significant breakthrough of that ascending trend line, pushing price action all the way into the area where price action started this year. And if you remember vividly, this whole decline happened and coincides with the era of interest rate cut by the Federal Reserve too as well. So it has been a tremendous rise to the upside and back to the downside. And in the last couple of months, we saw how this demand area made it difficult for sellers to run through. Now, fast forward to this month, we can see that price action has risen back into that area. And in the last couple of weeks, we have seen the USD JPY oscillate around the 150.00 area. And so, what is next as speculation of another intervention from the Bank of Japan keeps increasing by the day? In this video, we are going to be cutting through the noise to reveal the real potentials for both buyers and sellers. And as always, we will be breaking down the chart to identify the key level for next week, market trend, and potential structural patterns to identify where price might be heading and how to position ourselves accordingly. But before we proceed, it's important to emphasize that this presentation is for educational purposes only and not a financial advice. It's always wise to consult a professional financial advisor before making any investment decisions. All right, so let's get into the chart and see what the week ahead has in store for us. So, as always, my first point of contact will be on the daily time frame. So, I will be streamlining my focus into the character of price action since the month of July of this year. So that is when price action was at the yearly high around the 162.00 area. So we saw the crash happen, bringing price into this demand zone here. And this demand zone here held selling pressure for about 2 months before bringing price back into that key level. So our key level right here is at the 150.00 area, and one interesting thing about this key level is the fact that price has been in this area again in the same month of last year. So this was October last year. Look at it. We saw a little bit of choppy market conditions around this area, and then fast forward to the present year, we can see that price action is back at that structure. Now, in addition to this is the acknowledgement of the bearish momentum since July, giving me a couple of descending trend line. We have the first one right here, and then I have the second one right here. Now, we already have price breaking out of that um, descending trend line. Now, will this turn out to be a through breakout or a false one? So, as we head into the new week, how do we know if the market will maintain the bullish momentum? Will it break out, maintain buy pressure above the 150 to incite more buying opportunity? Or will the 150.00 area be so strong that it will become a barrier for buyers, pushing price back into that demand zone? Now, to help us navigate this market dynamic around the 150.00 zone, I have a simple trading setup on the lower time frame, that is the 4 hours time frame. But before we go into the 4 hours time frame, let's turn our focus to the upcoming economic event that will be influencing the character of market participants around this area next week. Now, based on these assets we are looking at for next week, we will be focusing on high impactful event from both the United States and the Japanese economic docket. And if we take this into consideration, we are the first impactful event for next week will not be coming until Thursday, October 24, and that is the S&P Global publication for the manufacture and service sector. Well, this is a key economic indicator that gives us an insight into the performance of both the manufacturing and service sector of the United States is. Then on that same day, we will be looking at the consumer price index from Japan, a data that measures the average change in prices of goods and services in the last 30 days, hereby indicating the inflation level of the economy. So these are the major impactful event to look out for next week, and of course the anticipation of this event through Monday and Thursday will definitely evolve into a structural pattern that will help us strategically position ourselves for the market's immediate reaction after this event. And of course this will reflect on the chart as price action. Now, talking about price action, let's scale back down into the 4 hours time frame. Now, on the 4 hours time frame, I took into account the character of price action in the last 4 to 5 weeks. That's from September 16th till the present moment. And this was what I was able to come up with. Now, on this chart here, it's obvious that price action has been bullish. We have an ascending trend line in place after connecting the series of higher lows, as you will see here. And you know how we use our ascending trend lines. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying. Now, let's zoom right into the nature of price action in the last week, and what you will see here is quite interesting. Now, following that impulsive move from the ascending trend line here, let me give a visual representation. we can see that through the course of last week, price action kept oscillating within a range in an ascending pattern, evolving into what looks like a reversal setup in the form of a rising wedge. And of course, theoretically, whenever we have this kind of structure, we expect that price will break down the support of the structure to incite a sell-off, maybe back into the ascending trend line we identified earlier to incite another wave of bullish momentum. So for me, I'm looking at that possibility here, that is selling at the breakdown of the 149.500 area, which of course shares a confluence with the support line of that rising wedge we have right here. So if price breaks down the structure, I'm willing to join a decline, maybe placing my TP around that ascending trend line, and that will be dovetailing to a minimum of 300 to 350 pips to catch there. However, if that is not the case and data coming from the United Kingdom supports a US dollar strength, well, I would want to see price break out of our key level at the 150.00 area for me to continue the uptrend move. So, our center of focus for next week is going to be between the 150.00, our key level, and that support line here at the 149.500, where the direction of the breakout will determine if we are going to be buying or selling. So there you have it, my in-depth look at the USDJPY for the week ahead. But trust me, I will be with you in the comment section after monitoring price action around this important juncture to decide if we are going to be buying or selling during the early hours of next week. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. If you haven't yet, consider subscribing to the channel for more insights, weekend market prep, and market updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.